For example, I can compare the way I'm testing systems and developing from 5 years ago. I'm still doing basically the same thing, but I've made a lot of improvements, and I think I've pushed myself further to make better and better algos. And I think that's what you have to do as an algo trader.
Kevin Davey is an algo trader, trading these fully automated systems. I had him back on a podcast many years ago. Good to have him back again. Kevin, welcome back on the podcast. Good to have you here today, of course.
Hey, thanks for having me. I'm glad to be here.
All right, so tell me what's been going on since we last spoke. It's been a couple of years now.
Well, I'd like to say that algo trading has gotten a lot easier. Especially I have more experience since we last talked, and the tools have gotten better. But if anything, algo trading is just as tough and just as complicated as it's always been. The tools are better, and the software is better. There's a lot more Python traders, for example, or people using Python. But at the same time, there's a lot more competition because I've noticed quite a few more algo traders entering the space. The nice thing is a lot of them seem to be doing things incorrectly. So a lot of people enter algo trading with unrealistic expectations, and they end up losing money and quickly leaving. But it's just a constant change, and so you have markets now that all of a sudden act differently than they used to act. Cocoa is a good example, where for years cocoa acted a certain way, but the past year, especially the past few months, cocoa's been just totally abnormal. And so you'll have algos that used to work that no longer work, and vice versa. Maybe some algos that were terrible years ago now are in favor. So it's a constant kind of reinvention of what you're doing, of what you're looking at. And, I haven't even talked about AI and how that's going to probably influence things down the road. So, since we talked last, there's a lot of it's the same. You still have to create rules to build your systems. You still have to follow them, and you can't deviate from them. But at the same time, a lot is different because technology is just keeps moving along, and we just got to keep pace as traders.
The perception of people is, I'm going to code like a crossover of MAs. I'm going to put this on my platform, run it. It's going to make money, and then I can trade this on like all the pairs, all the instruments I have, and make money. Tell me how that doesn't work out that way for algo traders.
Yeah, I see the same thing. And the funny thing about it is it does work when you don't include trading costs, which are slippages and commissions. If you assume that you trade with no trading costs at all, that the price is, when you see a price, you can get that price. You don't have to pay the spread and get a slightly worse price. But when you run maybe a simple moving average crossover, a simple breakout, and you don't put trading costs in there, most things make money. It's kind of weird, and I think that's what gets a lot of people, because when they first start doing it, they'll test without slippage and commission, and wow, I can make money, and this works on every market. Well, then they usually figure out that's not true. Oh, I got to include trading costs. And once you include that, then almost everything fails. I mean, it goes from almost everything passing to almost everything failing. And it's just because trading costs are always against you. And so, moving average crossover, as you mentioned, that does work sometimes in some situations, but it doesn't work definitely across all bar sizes and all markets. A lot of people look for a strategy that will work in all the markets, and I've found some that work in a few, but even the ones they work at, they don't necessarily work on all bar sizes because that can influence it. So there's a lot that goes into that, where there is no one size fits all. And the other thing a lot of people make mistakes with is they say, well, my strategy doesn't work, it loses money. So I'm going to do the opposite of it. So yeah, moving average crossover, but instead of buying when the price crosses above the moving average, I'm going to sell short. And they think that's going to work. And slippage and commission, once again, they're pounding on the door and they're saying, nope, that's not going to work. So a lot of times a strategy won't work and the reverse strategy won't work either. So what ends up happening with algo trading is you test a ton of different strategies, ideas, markets, bar sizes, and you're just looking for the very few that actually work. And that's what makes algo trading so tough. It's like you said, it's not like you can just come into it and say, hey, I'm going to trade a simple moving average crossover because I read about it in some book. It's probably not going to work.
What does it take for a strategy to work with these costs and commissions? Is it like are there commonalities or things that these strategies have in common, or is it like completely like random and you got to find it?
A lot of times it does seem to be random where you just have to test. The more you test, the more you're likely to find things that work. And in my own development and when I've worked with students on their development, what we've found is a lot of times things you think will work don't work where you think they will work. So just as an example, you might say, well, in the energy markets, it looks like breakouts will work. So, and you might see a few examples. So you'll try that and you'll find out that maybe over short periods of time it'll work, but over a long back test, maybe it doesn't work. But then you'll say, oh, I'll try it with the cotton market, just a regular commodity. And you find out, wow, it actually works there. And so you get these kind of weird things that you don't expect. And sometimes you can't really explain it, but in the end, if it works and it's profitable and it passes all the tests you throw at it, it might be worth trading. And that's kind of the way I look at it.
I've met some algo traders who say that you should have strategies that work on all the instruments all at the same time, and if it doesn't work on like multiple things and it's not robust enough, it's not solid enough to trade. You seem to be trading more like on a instrument per instrument basis. Tell me why that is and kind of how you look at things.
So any idea, any strategy that I do come up with, I do try testing it on multiple markets, and especially one that worked in one, I'll definitely try it in other markets and other bar sizes on those markets. But very rarely do I find one where it works for more than maybe 2 or 3 different combinations. I don't have any strategies currently that work on every market. And, I've heard people say that, and maybe it's the way I test, maybe it's the requirements I have for acceptability, but I just never find markets, a strategy that works on enough markets like that. And some people claim that they can do that. More power to them. I've never really talked to anybody or met anybody who's actually done that. But all I know is usually I'll have a great strategy that works in market X, but it looks terrible in market Y. And, I used to try to figure it out or try to say, well, maybe I should modify it for this other one. But now I'm at the point where, hey, as long as it works in this one market, I'll just keep using it until it breaks. And if it's making money, good risk adjusted money, real time, that ultimately is the ultimate test, then I'll keep trading it. And it could fail everywhere else. And I'll just keep going with it in the market it does work with.
Without getting too technical, what are some things you look at to decide if a strategy is acceptable for market or just not profitable enough for it?
So my process, I do a number of tests. I do walk forward optimization. So it's an optimization that uses or creates out of sample results, which is about the closest thing to real-time results that I've ever seen. So it's not a traditional optimization. The parameters values can change over time. I think that's an important test. So I run that. I also run a lot of random number simulations. It's called Monte Carlo simulation, where I try to see, hey, what could this strategy have done in the past? You look at the past and you see an equity curve, but hey, if you rearrange the trades, maybe you would have gotten a lot more drawdown. So I look at that really for a risk versus reward type thing. I want to make sure I have a good return to drawdown ratio. So I use the Monte Carlo testing. I also do some testing that can be either with just the exits or with the entries to see if there's an edge there compared to just normal entries. Is it actually doing something for me kind of test. And I also run some other tests, like, for example, I'll remove some of the most profitable trades and see what that does to the strategy. Does the strategy fall apart if you remove the top 2 or 3% of trades? Now, that's not to say the strategy isn't good necessarily, but what it does tell me is a strategy that gets big winners once in a while. Maybe it only gets a big winner once a year or twice a year. I know that will be a hard strategy to psychologically trade, because you'll probably hit a lot of losses, and then once in a while you'll get this windfall profit. Now, depending on the personality of the person trading it, you might be able to do that. I tend to like the smaller gains, which has a little more consistency. So there's tests like that I run. And then the other big test I run is after I develop it, the strategy, I let it run live for a period of time after all the rules are set and everything, just to make sure that it doesn't fall apart. Everybody can fall victim to curve fitting and over optimization. And I like to think I'm very careful to avoid that, just the way I do things. But I realize it can happen. Or you can get a back test, looks decent, and maybe it's all due to good luck, and that back test just got lucky. It sounds weird, but I've seen that happen. And then what usually happens is when you start monitoring it live before you put capital with it, the strategy might fall apart. All of a sudden, bad luck kind of shows up. And that turns out to be a tremendous test for screening some of these algos. You just let it run live for a while without real money. And as long as your strategy's been set up properly and it's something you can actually trade live the same way it back tested, that becomes a good indicator if a strategy is likely to continue to perform. So yeah, there's a bunch of tests I run, and at each point, at each one of those tests, there's a pass-fail criteria. It says, nope, this didn't pass walk forward test, it's out. This didn't pass Monte Carlo test, it's out. And you end up with very, very few strategies out of all the ones you test. And you just keep building more, and eventually you'll start building up a library of strategies.
How long do you run the strategy when you go live? I've seen people on this at both extremes. Like, they run it 3 days and then they're tired, they have no wins, they want to turn it off. People who run it for like a year, 2 years, and they have bad results and they want to keep running it longer. What's your kind of time frame to decide when you're going to turn it off or when you're going to add more capital to it?
Yeah, that's a good question. Usually what I do is I look for 6 to 9 months seems to be a good indicator of performance, because like you said, if you run it for 3 days or a week and it loses, that doesn't really tell you much for most strategies. And maybe for a day trading strategy that you trade 50 times a day, maybe in that shorter period you'll have enough data to say, oh, this isn't working right. I did something wrong. But for my trading, I don't trade that often. So I do swing trading where, a lot of my strategies trade once a week or even less. And so you need quite a bit of time, and you also need some different market conditions. Maybe the first month that you run live without real money just to evaluate it, maybe you're in a bull market and it's a steady bull market. Well, maybe the next month it goes flat. You want to see a bunch of different, or at least as many as you can in that period of time, different market regimes. The more, obviously, the better. So I found that's a good trade-off. If you start getting into, hey, I'm going to monitor this strategy for 3 years. Well, the strategy might not last that long. It might only last 2.5 years, and then it falls apart. And so then you've missed out on all those trading opportunities because you wanted it to last longer. I mean, I've personally had strategies that I've traded for over 10 years. I also have some that only last 2 or 3 years. So usually I'm happy if a strategy works in real time for 3 years. So it's the 6 to 9 months I use is kind of a balance between getting enough data to feel good about it without, just never trading it live with real money because you're scared that it's going to fall apart. So there's got to be a balance.
You told me something interesting earlier, which is the fact that the strategies with small consistent wins are better for the mindset than the ones with the big wins. Now, that's another big thing people think. It's like they think that if you have an algo just let it run, it's easy to manage, you don't have any psychology issues. Tell me about kind of the psychology behind running algos and how that impacts traders.
The big thing that I hear quite a bit from people say, oh, you should algo trade because it eliminates emotion. And nothing could be further from the truth. What it comes down to is what eliminates emotion is having money at stake. And if you're trading and you have a significant amount of money at stake, you're going to have emotions. Because otherwise, if it's so meaningless to you, why even bother? So let's just, Elon Musk, richest guy in the world, or one of the richest guys in the world, if he was trading one ES contract, he's probably not going to care. He could probably run an algo. He'd probably have no emotions, right? He's trading real money, but it's meaningless to him in the grand scheme of his net worth, right? So if you're trading, chances are you have a significant amount at stake. It's money that, hey, if you lose, you're going to be upset. And that is a big part of algo trading. You have to manage your emotions. And so what does that mean? Well, it means you backtest a strategy, you historically test it, and then when you go live, you follow that strategy. You don't turn it off and on. And I've tons of people I've talked to over the years who say, hey, I have this great backtest, but every time I go to trade it live, I get scared and I turn it off because the Fed is making an announcement, or over the weekend, I'm worried about war in the Middle East, so I'm going to turn it off. When your backtest ran over those weekends. And what I tell people is, hey, now you're backtesting one thing and you're trading live with real money, something else. That's just going to lead to heartache eventually. You've got to be consistent of, hey, I'm going to take every trade. I'm going to follow the algo no matter what it does. But at the same time, part of the psychology of all this is you've got to expect the worst, or at least the downside. Don't go into algo trading thinking, oh, well, I created a good back test. It worked live for a few months, so therefore I'm bound to make money. It doesn't work like that. You still have a good chance that your algo is going to underperform or it's going to break. So what you've got to do is you've got to also put in rules to say, hey, I'm going to start trading this with real money, but if this happens, if X happens, if X and Y happen, or whatever your criteria is, then I'm going to turn it off because I feel that, my data says the strategy's broken. What you don't want to do is let the strategy continue to steal from you. So I always liken it to, let's say you're running a grocery store and you have 5 checkout clerks, and those could be like your strategies, and one of your checkout clerks is stealing from you. Every order that they ring through the cash register, they take a couple dollars, put it in their pocket. Well, what are you going to do once you find that out? You're going to fire that person because they're losing money for you. They're stealing. You got to feel the same way about your strategies. You've got to be ready to fire them if they're not working. And psychologically, it sounds easy. Oh, yeah, well, I'll just turn that strategy off. But the reality for a lot of people is they have these strategies that they built and they put their heart and soul into it, and they worked on it for a while, and so they kind of feel emotionally attached to it. Sounds weird, but that's what it is. It's this attachment, and they're not willing to let go. Yeah, it's been losing me money, but I really like it. And that's part of the psychology too. You've got to be able to kind of cut broken strategies and move on. So, for people who say there's no psychology in algo trading, I think that's a totally misguided way to think about it. It's just different than screen traders who have to look and say, oh, hey, this is setting up. Should I take this trade or not? Now you look at things on a strategy level. Are my strategies running? Should I turn one off because it's broken? That kind of thing. So psychology still plays a big role in all this.
I know you work with people who trade algos for the first time, and that can be scary a little bit. Like you have this machine that takes trades for you, and you're not really aware of it too much. How do you get them used to running algos and like being okay with not taking trades, having the computer take trades for them? Let's say
It is a mindset change, and there's a couple things that come into play here. One, it's obviously letting go, and what ends up happening, because I did it myself, the first few algos you start running, you start looking at when it makes trades, and you're like, oh, it just went long. I wouldn't have gone long here. And you've got to realize you have to overcome that temptation to do something to overrule it. I'm not going to follow it. You've got to let the algo, and part of that comes with time and just practice. You say, okay, well, the back tests look good, so I should just follow that. That's what the approach I'm taking. So that's part of it. A lot of times, depending on how you're trading, there might not be as much action. You don't necessarily have to be right in front of your screen all the time. You can have set up where trades are sent, messages are sent to you, or you can check remotely just to make sure positions are synced up. I mean, you don't want to just walk away from it. I always laugh, probably 5-10 years ago, there was this big push with expert advisors, which are MT4, now MT5, their strategies. And people were selling, oh, hey, you just set this up and then you walk away and the computer will take care of everything and you'll come back and, then you'll be able to just withdraw money, all your profits. Doesn't quite work like that. And you want to keep on top of it and make sure things are in sync, because things go wrong. There's times where your internet will go down or whatever, and you've got to sync up. And so it tends to be, the actual trading part of algo trading tends to be a little more boring because you're just watching and just reacting rather than being a participant where, hey, now I'm going to buy and sell. And not everybody can take that. I had a student a number of years ago. He created some of the best algos I've seen, best performing algos. I mean, they were doing really well. And then one day he emailed me and he said, "Take me off your list. Don't email me anymore." And I was like, "Whoa, what happened?" I thought I did. I thought I said something. Thought, "Oh man, I upset this guy." And so I said, "What's going on?" And he said, "Well, I was algo trading, following your process and your rules, and yeah, I developed some good algos, but I got bored. It just wasn't that much fun just letting the computer do everything. So I started chart trading, discretionary trading. And long story short, I blew out my account by doing that sort of trading. And now I don't want to trade at all anymore." And so we just stopped. So there's definitely this a mindset change, and not everybody can do it. Not everybody can algo trade. A lot of people think they can, but it's hard. And just give you an example. I'll turn on a new strategy every month. I sometimes change out strategies that I'm trading, and at least it seems like, I know it's not true, but it seems like every time I turn on a new strategy, that first trade that new strategy takes always loses. And it's funny because I've talked to other people and they say, "Oh yeah, I noticed that too." Maybe we only notice the times where it does bad right out of the gate, but that's the way it feels. And that's not a good feeling. You start a strategy, you want it to win and make money right away. And psychologically, it's really hard when you start losing right out of the gate. But you got to realize this is a marathon, it's not a sprint. Whatever happens this week, in the grand scheme of things, as long as you don't get blown out, it's going to be irrelevant 5 years from now. You want to stay in for the long haul. That's the way you got to look at this.
Is there anything else we didn't talk about that you want to kind of cover or focus on?
Well, I'll say, a lot of, I mentioned AI in the beginning. A lot of people ask about that and say, "Hey, where's this all going?" And I'll tell you, I don't know what role AI will play. I can tell you the role it plays now is not so great, because what people will use it for is say, "Give me a strategy in easy language for TradeStation or Ninja Script or whatever, or Python, and give me one that makes money." And AI doesn't know. It hasn't done the testing, so it'll just give you something. Maybe it's good, maybe it isn't. What it is decent at is if you have some coding problems, it seems to be getting better with that. "Hey, can you give me some code that works?" It was about a year and a half ago, I ran a live webinar where I had trained an AI bot on all my books, all my website, my videos, so everything I'd said. And then I had people ask questions of me, and I let the AI bot answer it first, and then I answered it, and then we determined, hey, was AI right or wrong? And only about 50% of the answers were right. I think if we do it again, and maybe I will soon, maybe we'd be in the 60s to 70% right, but AI still gets a lot of stuff wrong. So it's something people have to watch out for, and it's probably, if it ever becomes like standard in trading, I think people will still misuse it. 30 years ago, I remember, because this was the early 90s, people were talking about neural networks and how that was going to revolutionize trading. And I remember seeing articles and, just stuff out there. This was even pre-internet for a lot of this, of how neural networks were going to be the greatest thing and how you should use it. Well, 30 years later, where are we? Very few people use neural networks. Now, some do. Some probably are doing great with it. I tend to think they're keeping quiet. Most people don't use it because they tried using it and it didn't work. And I think we're going to see things like that with AI, where people will use it and it won't quite work right, and then they'll abandon it and then maybe come back a few years. But that's probably the biggest thing out there. So what can you do as an algo trader? You can obviously, one, keep up on these things and just make sure you know what's going on. But the other thing is just to have a mindset with algo trading that you're constantly going to be improving what you're doing. So I can, for example, I can compare the way I'm trading, testing systems and developing from 5 years ago. I'm still doing basically the same thing, but I've made a lot of improvements, and I think I've pushed myself further to make better and better algos. And I think that's what you have to do as an algo trader, is just constantly improve, constantly reinvent yourself to make better trading strategies. And I don't think that will ever change, whether it's AI or even further down the road, probably quantum computers, that their speed is just off the charts compared to what we have now. Maybe they'll be able to just create all possible trading systems, in a split second. But until that time, there's definitely still an area where retail algo traders can succeed.
It's interesting. I'd like you to maybe clarify the fact of getting better over time. Do you feel like just doing it over and over again makes you better at it, or do you get better because you talk to other traders, you search ways to become better, you read books about it? What makes you become better over time?
I think it's both. One, just if you have a set process to develop strategies, if you keep doing that process, what I have found when I've done that is I can push myself to put tighter requirements on it. So just for example, the number of iterations you use to build a strategy. Probably starting out, you use a whole lot because that gives you a better looking back test. The trick is to reduce the number of iterations and the number of variables you use and still get something that's useful. So that is just something that improves over time. And then, of course, keeping up on the industry, whether it's trading magazines or books, talking to other traders, those are all great ways also to learn and improve. Listening to podcasts, just seeing, hey, is somebody talking about something new? And my general rule of thumb with anything I see out there trading related, whether it's a free report, and usually people are trying to sell you something. I get that. But I always try to get one little tidbit of information out of everything I see. So maybe somebody will have a free webinar where they promise to show things, and then they it becomes a sales pitch. But maybe there'll be something in there that they'll say that I'll think, oh, hey, I never thought of that. And it will lead me either down a strategy idea road, or maybe something I could do to my process to improve it. That's all I look for. I just look for little tidbits. And it's, they say a ship can't turn immediately if it's out on the seas. It can't turn immediately around. But if it keeps making 1 degree turns continuously and slowly over time, eventually, it's going 180 degrees the other way. And that's the way I like to look at trading it in algo development. It's just making incremental changes to what you're doing over time. And I think that then eventually gets you where you want to be. But to do that in the first place, you first got to be pretty solid in what you're doing before you start making changes. So what I'd recommend to everybody is make sure you come up with a solid process for building your strategies, one that works in real time. That's the ultimate test. Great backtest builders, they're all over the place. But great real money traders, they're very few and far between. And there's a reason for that.
So where can people find you or connect with you after this podcast if they want to learn more about the stuff that you do?
Sure. You can go to my website, kjtradingsystems.com. I have an email list. You can keep in touch with me. I also give you a couple strategies. One in crude oil that's been working pretty well for the past 2 years now since I released it for free. And then also, if you go to YouTube, just type in Kevin Davey I should come up first, but if you do Kevin Davey trading, I definitely will pop up there. And I'm also on Twitter, KJ Trading. But the big place, probably the most common place people find me nowadays, is probably over on YouTube. And you can just type my name in the search bar. I should show up.
Kevin, I appreciate your time here. It's been good for the listeners. A lot of value out of this for sure. Hopefully, we can catch up soon and see what you're doing with your algos in the future.
All right. Well, great. Hey, thanks for having me on again. And, I love listening to everything you do. You have a lot of great people on here. And, hopefully down the road I'll be back.